Hello, everybody, and welcome to today's episode of Trade the Chain. It is July 6th, and we hope everybody had, I know, time's flying. We hope everybody had a great holiday weekend. Those of you in the U.S., it was a nice long weekend for everybody to eat tons of hot dogs and hamburgers. By the way, did you see the guy at Coney Island? He won the Nathan's thing by eating 76 hot dogs, a new world record.
That's a long night. That's a really long night. Like I
saw your tweet on that, Ryan. I mean, what does a night after doing that feel like? We can get into that later, but
I'd rather not even think about it. Just something I laugh myself to sleep over every year, though, after the contest.
And the guy, he's relatively fit looking, so you got to wonder where 76 hot dogs fit. But
what about Kobayashi, the Japanese guy who used to win every year? He was skinnier than I am, and he just choke him down.
If this show had a hot dog eating contest, my money would be on Alex. That's all I got.
You know something? You're just going for the chubbiest guy, and that's not fair because at Nathan's, it's the small guys that are winning. Okay, so maybe it's you, Monty.
Dark horse.
But folks, there was it's a relatively good news cycle that's out there. I don't know if you guys are scrolling the likes of CoinDesk or the Block, but there's really not too much to be upset about. And actually, there's a lot of bullish fever in the air to where the market's going and what different investments are being made and stuff like that. So I was actually excited and had a smile on the whole weekend, worrying about the Monday dump, which.
However, sorry to interrupt, but the positive news, it's not all positive. CNBC and mainstream outlets are really pushing that narrative that GBTC is going to cause this macro sell-off. So I'm listening. I'm looking forward to hearing you guys debunk that later.
That's a good point, CJ. A lot of FUD going around with the GBTC lockup expiration that's coming up shortly. We're going to go over that in today's episode, actually, because I don't think a lot of people actually know some of the true mechanics around that. So as CJ pointed out, I don't know if it's Kramer and crew, but they're scaring the crap out of a lot of people over there. But all right, let's delve into it. Ryan, take us away with the legals, please, sir.
You got it. Thanks, Alex. This is just a reminder that all content provided by Trade the Chain and Market Rebellion is strictly for educational and informational purposes only. None of this is investment advice. Don't listen to a word we say. Just don't. Excuse me. Sorry. Trade the Chain is brought to you by TradeTheChain.com, a global community of traders across 23 time zones. That's a lot of time zones, people. And they're of all ages, all backgrounds, all abilities, and all using AI-driven sentiment indicators and actionable alerts to help them beat the market. If you too want to trade like a crypto insider, head on over to TradeTheChain.com.
And then moving over to marketrebellion.com/crypto. This is not our usual site, but I just wanted to preview the first slide of a course that we should have uploaded additionally to the Education Center later this week that has to do with momentum. Here's a nice shot of the Market Rebellion NASCAR from a while back. But if you sign up, you can do so for just $1, get those first 30 days. Monty and I publish trade insights on a weekly basis, as well as our macro thesis and other investment ideas. You can chat with us in the live chat in our pro charting platform, basically 20 hours a day. But with that being said, gentlemen, anything before we get into the analysis here?
One thing. I'm happy I finally found a good barber in San Juan.
Oh,
it's been a while since I got a good haircut. I was looking pretty ragged,
Looking fresh today, though, Ryan. Looking very fresh.
Yeah, it's good. Guy did a good job. Nice fade. Yeah, I'm loving it.
I just want to say that's a very slick paint job on the Market Rebellion NASCAR. I look forward to seeing that on the track again. Yeah.
It's a nice car.
Yeah, that Voyager one doesn't look too bad either.
No, not at all.
Anyways, let's get to the markets. Let's give the people what they want. We're pretty much flat today. Down in terms of volume, negative 32%, negative 22% for ETH in terms of the overall relative trading volume. So pretty standard 4th of July in terms of volume. We really didn't see anything that notable over the weekend, but we're still just hanging out in that neutral to bearish sentiment. Still favorable that we're remaining on the bullish side of the long-term sentiment. But moreover, let's get into price and the analysis in Bitcoin. So we've been rejected from this moving average, and the bears in the market love to talk about, the lower highs that we're creating. And the bulls like to talk about, the higher lows we're creating. So essentially we're in kind of this falling wedge pattern, and we need a breakout to the upside or the downside. And until we get that, we're likely just going to continue to consolidate in that area. Now, being said, something that Monty and I have been pointing out a lot is this bullish divergence in price. We have price kind of going through this bearish to neutral consolidation, but we have the CMF turning up. We have positive funding in the overall space. And we also have a positive divergence on the RSI, or excuse me, the MACD. That is not the RSI. But if you looked at the RSI, you would see the same bullish divergence because they're very similar momentum oscillators. Nonetheless, just not seeing a whole lot of volume. Still in this bullish consolidation, waiting for a breakout above or below price. We might get it to the upside. I'm starting to lean more bullish, and that'll kind of play into other things that Alex and Ryan and Monty discuss later on in today's episode. The most bullish thing I think about Bitcoin is this chart right here. This is also the same bullish divergence in terms of longer term holders, as well as large holders with over 1,000 coins in their wallets. We're actually seeing an uptick and a very sharp increase at this level when price still remains rather stagnant to bearish. So that's pretty bullish from my perspective. And, we are neutral. There's no direct action to take as of now, in my perspective, looking at this chart until we get a breakout of this range. Nonetheless, I'll say it again, I think we're getting closer and closer to a bottom each and every day here based on not only on-chain metrics, but also longer term oscillators and bullish divergences that we're seeing all over the place in Bitcoin.
I mean, you have to be right about that. Sorry, Alex, because looking at active wallet addresses, all the latest data points to, we're at a level not seen since October of last year, right? So, at a certain point, we kind of have to be bottoming out, especially with all the money being raised by institutions and the interest that's there. And I know that wallet addresses are more correlated to retail trading than institutional fundraising is, but at a certain point, something has to give. And if we don't break up dramatically to the upside, there has to be a grind higher just because of the amount of money flowing into the space.
Yeah, I would agree with you, Ryan. And I think, like CJ said, this was kind of a lackluster weekend in terms of volume. That's typical of a holiday weekend. But that wasn't true like entirely across the board in the crypto space. We did get some price action in some assets, particularly DeFi assets. Yep. We were kind of joking around on Friday, Ryan, that we're ready for DeFi summer round 2. I don't think this is the start of it, but it is encouraging to see that, even amidst overall market weakness, there is still the signs for strength. But one thing I did want to mention, CJ shared this chart with me this morning. We talked about it on the Daily Crypto Bite. And one thing that I have been talking a lot about is looking for negative divergences from the 20-period smooth moving average. This is, very typical of what you'd see of an asset that is overextended from its moving average. We got this buy 9, a nice bounce back right to this moving average, but now we're hitting resistance on a sell 9 right at this 20 smooth moving average. So DeFi had a great weekend despite lackluster volume in Bitcoin. And, I'm encouraged by the volume we're seeing so far. CJ also pointed out the uptick in money flow, something that, we really look for in terms of a reversal of a trend. But here, based on what we're seeing, not just in the DeFi perpetual index technicals, but also with ETH, I think DeFi is not quite ready for that next leg up. But if you were in on some of these trades this weekend, some assets like Comp, like Maker, congratulations, because they performed very well. And I think that's just evidence that despite a relatively boring market and a dead holiday weekend, there are always opportunities to trade this market and find some money to make. So this weekend's winner was DeFi.
Absolutely. And when you're looking at the sentiment building around projects like Aave and Yearn and others like Comp, their tokens are down, 65% from their highs earlier this year. You have, engagement and assets flowing into these projects at all-time high levels or levels near all-time highs. At a certain point, the metrics don't line up to the pricing, right? And that could be a number of things, right? Maybe they were overbought earlier this year. It doesn't mean that they're undervalued now, but price eventually has to respond to the fundamentals moving in a positive direction, does it not?
Yeah, I'd completely agree with you, Ryan. And that's one thing that is definitely still prevalent in this market is price action that is, more so based on just the sentiment and the feel of the market as opposed to, the actual fundamentals and even the technicals. I think a lot of it has to do with confidence in the overall space. And until that becomes more robust, I think that those factors might not be fully priced in to any given asset.
All right, cool.
I didn't want to step on your toes again, Alex.
Yeah, I mean, one of the interesting things was the lack of volume this weekend, and not just the lack of volume, but the utter. I mean, it was so low. I haven't seen the volume so low in such a long time. So that was interesting. Aave, it's interesting that you bring up, Ryan, because long-term sentiment is bearish on Aave, and some people actually in our community are putting that to the fact that it might have to do with Aave Pro having to go through KYC with users. And so that was interesting. Now that's just a speculative thing.
That's weird though, right? Like their total value locked is at an all-time high. Like that's strange that it would be that sentiment would be bearish in the long term.
Well, I mean, that's a good point. I don't know. I can't remember the last time Aave was bearish in the long term, just from all the institutional type products that they're developing over there. But they are coming out with this Aave Pro, which is, I think, going to be for the institutional side. Structured products that they're making. And listen, everybody always gets scared when people say KYC and crypto, they're like, forget that place. So I don't know, we'll see, but it's interesting to see that. All right, let's go to, and first of all, folks, Monty mentioned the Daily Crypto Bite. That's the Daily Crypto Bite is what Monty and CJ put out every morning. You can check that out. Links in description. Definitely, it's your quick hit of like analysis and news with your morning coffee. Also, tomorrow we're going to break this up. We wanted to tackle two things today: the GBTC lockup expiration and the London fork on Ethereum, but we're going to put Ethereum to tomorrow. And these are kind of like just going through the educational basics of it and what people can really, and putting out as much facts as we can dish, so people don't get all fudded out, as those youngsters call it.
So Alex, why are we going over GBTC today? What's this FUD we're trying to debunk?
It's a good question. So everybody thinks the world's going to end when these expirations. I'm not even lying. I mean, you should see some of the communities and chat rooms. People literally are like, wow, the Bitcoin market's about to crash. But it's not, Ryan. We all know that, on our side of the table.
We don't know that, but
yes.
Yeah.
There's no implosion going to be happening. That was the wrong word to use. Know that. Yeah. Go ahead, CJ.
If we do have a decrease to 25 or 27, not unrealistic. However, GBTC is not going to be the cause.
Why is that, CJ?
That is why he's so articulate. If I could only put it that way, that's what I meant to say. I'm sorry, Ryan.
So first, I guess before we get into this, it makes sense to explain how GBTC works, right? Like just a basic primer on that before getting into why it won't crash the markets. Or at least it shouldn't crash the markets. And I think, Monty, your explanation before we got on here was better than the rest of us can really.
Why don't we do this?
Yeah.
Why don't we start at the beginning? Let's talk about what GBTC is, and then what actually happens as the expirations come to be. Let's just take it step by step, the mechanicals of it. All right. So, CJ, I'm going to let you start off. What is GBTC?
It's the Bitcoin Grayscale Trust. It is an easy way for institutional investors to buy GBTC or get exposure to Bitcoin without actually having to custody the asset themselves. So Grayscale holds a bunch of physical Bitcoin and they issue shares in the form of GBTC.
All right. And this is publicly traded, CJ?
That's correct. I have some that it's kind of ironic. I have crypto money, and then I have a little bit money that I give to my stock market manager, and he's got me like 3% in GBTC, which like I don't already have enough exposure to crypto, but I mean that's beside the point. That's what GBTC is. It's an institutional and retail product that can be bought and sold.
Exactly. And
right,
and
it doesn't trade on an exchange like NYSE though, right? It's like over the counter.
It's over the counter, and the thing is that this is for the everyday person, and you could literally go down to I think it's approved everywhere. So you can go down to the corner Charles Schwab in Kansas and get some GBTC for yourselves. So it's almost like I think the closest thing would be like a synthetic mutual fund, right? Not listed, but you own shares, but you don't own the underlying, that sort of thing. Okay, so let's go with the lockup periods. Monty, describe to us what this lockup period thing that goes on in GBTC.
Yeah, so essentially when you make an investment into GBTC, they set a lockup period, and that just allows them the time to put your money to work. So essentially you cannot take profit on your trade or cash out of your trade until we reach one of those lockup periods. And that's why we're seeing so much FUD hit the market this week, is because over the next 2 weeks, we're seeing the largest amount of GBTC becoming unlocked that in the history of its trading. So you've seen CJ mention, CNBC, even JP Morgan put out a report talking about how this could lead to downward pressure on GBTC prices and on the Bitcoin markets more generally. But what we've been seeing from more crypto native analysts is kind of the exact opposite. So when the lockup period ends, you don't get paid out in Bitcoin. You get paid out in cash equivalent to your initial investment plus how it performed during the lockup period.
Like a cash dividend on a stock.
Yes, exactly. And like you pointed out, Alex, GBTC, they're not going to be dumping this Bitcoin on the open market. The lockup period doesn't hand out the Bitcoin to the investors. GBTC holds this Bitcoin as part of their fund, and they pay out in cash. And one thing that I've seen a lot of crypto native investors saying is that, people have been, like JP Morgan, have been kind of ignoring that subscriptions funded by debt will ultimately lead to spot buying. And also you have, a lot of expectation that as this fund unwinds this massive trade, it's actually going to put a lot of buy pressure on Bitcoin, not sell pressure, because those who sell GBTC will have to buy back Bitcoin to either cover the short leg of the trade or just to get back the initial exposure that they were looking for when they began the lockup. So okay. I think that given the fact that, it's not being paid out in Bitcoin, it's being paid out in US dollars, I think we're going to see actually a lot of buy pressure hit the market over the coming weeks as a lot of this capital becomes unlocked.
Also, another important point, right, is that when someone sells out of GBTC, Grayscale isn't going out on the open market and selling the Bitcoin equivalent of the shares that are being traded on the open market that are sold by an individual investor, right? What do they do with that Bitcoin, Monty?
Well, hold on a second. I don't want to move too fast, and that's a great place to recap it right there, Ryan. Okay. So, folks, remember, you're buying shares that represent exposure to Bitcoin, not the actual Bitcoin. Okay, those are owned by Grayscale Trust.
It's kind of like a sophisticated Robinhood, right? When you buy Bitcoin at Robinhood,
exactly.
You have a pegged instrument to Bitcoin, but you don't actually custody it. Instead, you pay Grayscale a 2% management fee for the privilege of them holding your synthetic Bitcoin. Or
exactly.
Giving you synthetic Bitcoin, rather.
These lockups that are periodically timed, when these lockups expire, you actually get paid out in the cash, not the Bitcoin. Mm-hmm. Now, what happens to the Bitcoin? What Ryan just mentioned. The Bitcoin is owned by Grayscale Trust. Mm-hmm. So when these expirations happen, nobody's going into the open market to sell tons of Bitcoin and crush the order books. All right. So the people get their cash. What Ryan just clarified with Grayscale keeping the Bitcoin. Now what happens from there?
Yeah, now what happens from there? It's still up in the air, but what a lot of people are expecting is the fact that because these people, made an investment in Bitcoin years ago, either with, US dollars or with actual physical Bitcoin to enter the trust, it's believed that they are still going to be, overall bullish on the Bitcoin market, and that they're not going to, when they get this GBTC lockout, they're not just going to, that's it. They're going to have no exposure to Bitcoin. What people are expecting is that it's going to put some buy pressure on the spot market, that these people be looking to, like I said earlier, either, buy some Bitcoin to cover the short leg of their trade, or just get back that initial exposure that they had when the lockup first started. So I'm of the belief, with many other native crypto analysts, that this is going to be bullish for Bitcoin. The time at which we'll see it, I'm not too sure. The biggest lockup, I think, is July 24th or something like that. So in the following weeks coming from that, I will be expecting more volume on the Bitcoin market, and that will be in the form of more buy pressure on spot exchanges.
So basically, to recap, you cannot sell Bitcoin that you don't own, and you cannot drive down the price of Bitcoin by selling Bitcoin you don't own. So, that's ultimately the most important point here. You're not being paid out in Bitcoin, but from GBTC when you liquidate your holdings. You're getting cash, and that cash could either be invested into Bitcoin, like Monty is saying, or you could pivot to Hotcoin Summer and start looking at these DeFi projects.
Oh, geez.
It's as simple as this, really, if you think about it. The people that have money locked up in GBTC are Bitcoin bulls. They've been bullish on Bitcoin. They made a nice hefty profit on it. And now essentially you're dumping billions of dollars back into the hands of Bitcoin bulls at a time at which, the market is looking primed for some buy pressure. So I think if you take those factors into consideration, I think it is looking like ultimately a healthy thing for the market.
And this kind of goes in with the chart Monty and I showed a little bit earlier with that positive divergence. I'll just show it one more time. But this it suggests that big money players, the type of players that would invest in GBTC, they're getting into Bitcoin despite the fact that price is remaining rather stagnant for the moment. So I think that from an institution's perspective, they didn't want to buy at 50 or 60K on the head arc of the parabola. They're probably going to buy now when we've had a 60% or 50% retracement. So
also worth keeping in mind, aside from GBTC and what impacts different conditions will have on Bitcoin and the broader ecosystem, institutions are raising money at record rates for crypto-focused investment strategies. And as Jeff Dorman over at ARCA pointed out in last week's newsletter, for the first time on record, junk bonds are yielding less than inflation. So if they're in search of yield, they're looking pretty squarely at some of these DeFi projects that are stable, that are trusted, and that pay out these types of yields. And it would make sense for them to start getting into that market along with Bitcoin as well.
I guess that's bad news for Michael Saylor.
Well, perhaps. There's another bear theory that MicroStrategy is going to be a forced seller of Bitcoin, which
but he issued junk bonds.
Right. But a lot of people think that he's going to be a forced seller of Bitcoin because of the bond covenants, which is another thing that Jeff pointed out. There's no covenant to force him to sell Bitcoin. No one can make him do that. So that $500 million worth of Bitcoin he bought a couple of weeks ago, he owns that. MicroStrategy owns that, and they can't be forced to sell it no matter what. So people don't have to worry about that either. There are so many people with tinfoil hats running around talking about why Bitcoin's going to crash that none of it makes sense. It all contradicts each other.
I also want to get back to GBTC for a moment, because GBTC has what's called a net asset value. Okay, so the net asset value is the net asset value, the NAV, of that share and what it's worth. When Grayscale first, launched this product, there were some heavy premiums on the NAV, meaning that a share of Grayscale GBTC, that equivalent in Bitcoin, the share was actually worth, you were paying upwards. I believe it got up to 28% premium over that same value in Bitcoin. Now, what's happened over the last 12 months is there's been inverse in that premium, and it's now gone to a discount. I don't know what the discount is today, but that also is very attractive for the people that were, that wanted to get in it, because they were then buying it at a discount to what the actual Bitcoin value was. Now, you may ask, why would somebody, say 2 years ago, pay 28% premium to own a piece of Bitcoin when they could just buy it for 28% less on the market? That's because it was geared towards institutions, and institutions were willing to pay that 28% premium in order to have it safeguarded and managed by a professional trust company. But now there's discounts to be had and profits are being made. So it's an interesting dynamic. They're smart cats over there. They're not stupid.
I just don't know why anyone would pay a 2% management fee. I don't get it. If you can,
if you're
elsewhere,
what if you're a big fiduciary though? You're paying that to offset risk.
You could just use
imagine
copper to custody it, and they'll charge you less. I just don't get it.
Ryan, imagine you're back in your prime brokerage days on Wall Street, and they're like, "Hey, Ryan, we want you to go get some Bitcoin for our asset management clients," and you go do that. You set it up, and then what happens if something happens to you? I don't know.
It's a pass-through cost, but it just adds an unnecessary cost basis to something that doesn't need to be there, right? You can use Anchorage, you can use Copper, you can use Galaxy. They all
but they're saving you the time of setting that up. I know. I'm just, dude. You think people aren't lazy at bulge bracket banks?
Well, I know they are. They absolutely are. But I don't know. Whatever. But there are individuals. I understand why banks do it. But you have individuals people who have proudly told me they're in GBTC, and I just told them point blank, why? Why are you in GBTC?
Well, you heard CJ. CJ did it, but he's not at the discretion of himself. It's an asset manager who's diversifying the portfolio. Well, I want you to call CJ names now.
I've called him plenty already.
I checked it a couple days ago or a week ago, and I had.
But that's different, right? It's different than making a personal decision to go into it. Like people who contacted Grayscale directly and said, "I'm giving you money." I get it. I get why CJ's in it the way he's in it.
All right. First of all, I didn't even know, so it's not like I elected this.
CJ just walked into a fight. He didn't start.
You sound so happy about it.
I lost my train of thought.
Sorry. This show will do that to people. Oh, I do want to comment. I saw somewhere in the comments. Oh, go ahead. Go ahead quickly before you forget.
You can keep your Bitcoin in an institutional environment where they're lending it, or, what's the difference between Grayscale, who just takes a premium, versus, a brokerage that will actually offer you interest on your holdings? Is there some guarantee in Grayscale that it will be less risky? Because it still seems just as risky as a Ledger wallet or something like that getting hacked. Do you guys have any thoughts there?
I think
if you were opening a hedge fund and you had that problem, Alex, that you just posed to Ryan, why not just put it in something that yields interest?
Well, if it yielded interest and provided insurance and reparations, first of all, you got to remember you're not investing in the physical, right? You're investing in a share. That's very different from an exposure standpoint. So for let's say a large fiduciary counterparty in one Bitcoin, that's a really safe way to go in a chartered trust, not directly liable for the underpinning. I think it's a completely different game than having your banker throw it on a ledger and into his desk drawer. True. I don't know, but I do. Go ahead.
You could use something like a Fireblocks, not a Fireblocks, not them, but like a Curve, right? Where Curve has that insurance from Lloyd's of London. They have multi-sig wallets. They have institutional grade custody solution. And it's used by a lot of large brokers on the street. I won't name them because a lot of them are under NDA. And I know them because I worked with Curve in a consulting capacity, but a lot of the retail trading platforms that people use have Curve as their custody provider. You'd be surprised. So I don't know why you wouldn't just implement a white labeled solution with Curve. If you are a large enough fund and have all those assets and have that concern.
Well, because first of all, oh man, we got to go to like a part 2 of this. I will come back and I will explain the lockup arbitrage opportunity. There's on the premium buys. Everybody was like, why do you pay a premium? Because there was a spread arbitrage on the expirations of buying a 6-month lockup on Grayscale, which you actually walked away, not even washed out, not even down, and in the green. So oh gosh, it's like one of those, at least it's not Michael Saylor on the firing block today here. Guys, we're going to do Ethereum tomorrow. We're going to explain to folks what's happening with the London fork, walk you through that, because there's also a sense of like almost reverse FUD with that. GBTC, my opinion, it's going to be a nothing burger. I think a few other people may agree on this panel. And then tomorrow with Ethereum, it's actually the reverse. There's a lot of people what do they call it now? Hopium? Thanks. I do that for Monty's benefit. But there's a lot of hopium going in that Ethereum is going to solve world problems come August with the London fork. And we're going to explain to you that actually may not be the case. So there may be a bull run or a rush of positive sentiment going into it, but I wouldn't hang your hat on it. And we're going to break it down and explain exactly why in tomorrow's episode. So I like the idea of the fade indicator that one of you guys brought up. The problem is that if you know Ryan, he is so strict on that haircut, it would be constantly bullish. So it wouldn't grow out to even a bearish mode. So that would be a problem.
High and tight.
But folks, that's it. We're going to break down Ethereum tomorrow. Don't forget to visit Monty and CJ over at marketrebellion.com/crypto. Their morning video with your coffee link is down below in the description. And I believe we're all on tomorrow. So we'll see you then. Hang on to your handlebar.